Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. Joining me is my co-host, CoinDesk managing editor of Global Capital Markets, Lawrence Luton. Happy Friday, Lawrence.
Happy Friday indeed.
Yes,
Getting ready to
go down south to Palm Beach. Oh, and we've got the big game over the weekend.
And the big game, yeah.
Lots to look forward to.
Nobody cares about my travel plans,
Bitcoin.
to be sure.
Right now, the CoinDesk really Bitcoin price XTX index is at $43,834. Bitcoin is slightly up over 1% over the past 24 hours. The CoinDesk ETX right now is at 3,126. ETH also slightly advancing about 0.7%. And the DFX CoinDesk's DeFi index right now at 316. DeFi, though, taking a hit, tracking losses of just about almost 5%. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. So some mixed results in the crypto markets out there. Lawrence, DeFi taking a bit of a hit. We got our bigger caps, cryptocurrencies making advance. What's going on?
Everyone's trying to figure out what to do. It's very
confusing out there.
It is. I mean, we had this inflation number that came out a couple of days ago, and it highest in like 4 decades. I mean, the last time you saw numbers like that, I think Flock of Seagulls, a band that I do absolutely love, had a hit on the radio. So it's sort of
and there's bullish news out there. KPMG Canada adding crypto to the balance sheet. Korea's sovereign wealth fund betting on the metaverse and AI startups, according to a Bloomberg report.
And you have higher interest rates, rather. You have the 10-year yield going above 2%. So that's kind of, that's offsetting all that, right? Because higher interest rates mean that we're seeing the monetary policy kind of trying to curb inflation as best as it can. Whereas before it was more about spending and trying to stimulate the economy. Now it's a worry of overheating, and we have the Fed planning to raise rates over the next few months, and Fed officials coming out and saying, "Hey, I want to see even higher rates." So, this is kind of a weird time.
Could be just a lot of whales selling before the crypto bull. All right, let's dive further with our markets guest. The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
As Christine alluded to earlier, KPMG Canada is buying crypto. And joining us now to discuss the crypto markets and some more of that is Kareem Sadek. He is the advisory partner of crypto assets and blockchain services co-leader at KPMG Canada. The accounting firm, as we said, bought some crypto. They bought some Ether and they bought some Bitcoin. That's big news. So here to discuss more. Welcome, Kareem.
Thank you. Thanks, Lawrence. Thanks, Christine.
Hey, guys, selling. That's why we're seeing a slight dip.
Well,
how's everybody doing?
Kareem, we got to ask. Very good. I hope. And want to know more about how you guys are feeling and how you're doing, because but there is a question we have to ask, and that's this: why have crypto on your asset side if you don't really have liabilities in crypto? You guys are an accounting firm and things have to balance. Does it make sense? Is it prudent accounting necessarily and prudent financial management to have assets in one denomination and liabilities in another?
Well, that's a great question. Thanks, Lawrence. And to be honest with you, I think it's primarily driven by us. We want to support the ecosystem. We've been playing in the space, advising our clients, working with our clients. And we also, just to be clear, all our investments are very prudent. We think about it. It's not something that happened in a whim. It's something that we thought about. We've done our due diligence over 9 months. We've consulted across all of our various practices, our expertise. We worked with different service providers, and we assessed those service providers just to also make sure that we're doing the right thing. But I think it's really driven by, we believe in the space. We believe that this space is going to continue to grow. The ecosystem is going to continue to grow. We're seeing a bunch of different utilities across the board. And for us, we always say, like, whether you are any type of institution, I think it's more prudent for you to start looking into that and actually assessing it as part of your asset mix. I think that's a very viable option, and we've assessed it. We've done our due diligence, like I said, and we thought that's the best thing for us to do.
So now you also have exposure to MicroStrategy. You own some of that. And that in many ways has been an indirect play into crypto, into Bitcoin itself. Would that continue, considering they just had an impairment charge? Why not, now that you have that direct play by buying Bitcoin directly, why would you still keep it on your balance sheet?
So as it relates to that, to be honest with you, Lawrence, I don't think there's something that I can or just to talk about in terms of what the other investments or what's happening as it relates to that. But I think as it relates specifically to Bitcoin and ETH, like I said, I think it's also part of it was that we always said we believe in this space, like I said, but also it's part of it is for us to say that we have skin in the game and that it's something that we want to continue to be involved, and to say that we've done it ourselves and we can help our clients in terms of what the things that they should be thinking about, and now we can help them get through that process too.
Just want to hear your outlook on Bitcoin and Ether, given that you put them on your balance sheet at KPMG Canada.
Mm-hmm. So again, I don't want to stipulate in terms of whether it's going to go up or down. I think that was not necessarily the intent as we started through that journey. Like I said a while back, I think it was primarily to say whether we had, like, again, saying we have skin in the game, but also primarily just to say that we've gone through the process. We wanted to understand it more and more, and to say, because we advise a lot about it, but also to say, like, if somebody comes to us, what did you do? How can you help us? And I think that's primarily it. And I think that the main aspect of it also is to show support to the ecosystem and to say that we believe in this sector, we believe in this industry, and we believe that there's many good stuff to come.
And I understand that there's also interest in going into DeFi and NFTs and putting that on the balance sheet at KPMG Canada. Can you tell us a bit more about that?
And it's not necessarily putting it, just to be clear, in terms of putting it on the balance sheet. I don't necessarily think whether we're going to continue to do that or not. Again, I think it's primarily us continuing to look at sort of very prudent ways of investing, and investing with something that aligns with sort of KPMG's values, the due diligence that we need to do. But we are going to try to continue to invest in very creative and innovative ways in the space. But again, I think just it's a key thing to think when you, like you said, we're an accounting firm and professional services firm, and we advise a lot of clients. So just being prudent with what we do. So whether we do more in terms of adding to our balance sheet or whether we invest in other creative ways in this space in general, that's yet to be seen. But we are definitely, there's a lot to come for sure.
Are there any tokens or NFTs that you can name?
No, not necessarily. In terms of any tokens, there are a lot of good ones out there. There are a lot of ones that I personally believe in, but that's, again, sort of personal beliefs and things that I do in my personal time. But I don't think necessarily anything that I would point to specifically in terms of any tokens.
So, Kareem, what kind of clients would you advise, or have you been advising rather, to get into crypto, if at all? And how would you go about doing that? Is it something as simple as I was asking before about whether or not they have crypto exposure already? Is it for clients that have inflation worries? Is it depending on the country? What is your criteria for advising for it?
Yeah, so the criteria, honestly, we hear out a lot of the organizations that come to, whether it be crypto native companies, whether it be family businesses, whether it be traditional financial institutions, asset managers, pension funds, like whatever. Like we have a variety of institutions that come to us, and family, like I said, and exchanges, crypto native companies in general, organizations. And to be honest, it really varies a lot. So a lot of them where they're already obviously engaged in the space. So we'd come in and they'd say, well, how can you advise? Well, we can advise in many different ways, whether through assurance services, whether it be like SOC reports, typical assurance services that you see, or if you're coming as an organization that's thinking about working in the space, we really help through building out the strategy roadmaps. And again, it's not necessarily us always doing the work or deploying certain products or solutions. There are many service providers out there. Again, we support there are various very good organizations that are out there, and we just I guess connect the dots and help these organizations in their due diligence so that they can create direct exposure or indirect exposure to their clients within the crypto space. So it really does vary a lot in terms of how we can help or who we're helping, really.
Kareem, we're just hearing news from Bloomberg that Korea's sovereign wealth fund, South Korea, is looking at investing $200 billion, or rather, their sovereign wealth fund is worth $200 billion, and they're looking at investing in the metaverse and AI startups. So, I mean, this is really interesting because last year we heard about hedge funds, private equity entering the market, and now we're hearing about sovereign wealth funds, pensions. So I wonder if you're hearing the same demand, and that's potentially why KPMG is taking action as they are. And from where are you hearing demand?
It's interesting. I mean, this is always interesting. I always see more adoption and more adoption. If you would have asked, I think somebody asked me why were organizations hesitant maybe a few years ago into entering the space and playing in the space. I thought about it for a second, and I think it's just trust, right? Like when you look at certain organizations, not to say that they were good or bad, but again, it's all about trust. When you see some of the organizations before in terms of what they do, the organizations that they are working with, insurance that they might have, working with traditional actual insurance companies that are out there that we are used to. I think people are getting more and more used to working with these crypto native organizations because they're big, they're doing very great things, they're working with great organizations. So adoption is a great thing. But going back to your question directly, in terms of are we seeing? Absolutely. I think it's probably one of the hottest things right now when you talk about metaverse, and then people saying, well, NFTs, how can you get, we have organizations, how we can get involved in NFTs and the metaverse. We always say it depends on what utility you want to do, right? I think we're going to see more of that, and we're hearing a lot from our clients. But I think it's an interesting space, and we're hearing from across the board, by the way. We're hearing from various industries, various clients. I'm trying to pinpoint in one. All the various industries are trying to figure out how do they get into the metaverse? How do they get involved? I think the consensus is it's going to be, I always think about it is, you know how organizations need to have a website? Everybody's going to have some form of interaction within the metaverse at some point, right? So it's something that's coming, and we're seeing a lot of traction in it for sure.
All right, well, you're in it early compared to the other big corps if they do enter the fold. Yeah. Thank you, Kareem. Thanks for joining us. That was KPMG Canada Advisory Partner Kareem Sadek. All right, coming up, Polygon on their $450 million raise, State of India and COVID Relief Fund with Sandeep Nailwal.
Hi, I'm Michael Casey, Chief Content Officer and co-host of Money Reimagined. You're watching CoinDesk TV.
Checking in on Bitcoin, the CoinDesk Bitcoin price XPX index currently at $43,666. Bitcoin slightly up about 0.6% over the past 24 hours. The CoinDesk Ether price ETX index is at 3120. ETH also climbing just a bit, about 0.5%. The DFX CoinDesk DeFi index is at 316. DeFi pushing back about 4.8%. All right, speaking of big investment, Polygon, a layer 2 scaling solution for Ethereum, raising $450 million from Sequoia Capital India, Galaxy, SoftBank, and others to build Web3 applications and invest in zero-knowledge technology. Polygon's native MATIC token surging almost 30% over the past 7 days since the announcement was made earlier this week. Joining us now is Sandeep Nailwal, co-founder of Polygon. Hello there, Sandeep. Thanks for joining us. So just off the bat, what's the valuation of Polygon now, and how do you plan to expand into Web3?
Currently, Polygon's fully diluted valuation is around 88, this is $18.8. And, the purpose of this fund has been to kind of we have multiple efforts now, brief idea that Polygon is a layer 2 scaling aggregator. Basically, there are multiple solutions that Polygon provides to the developers from where they can choose to build their widely adopted applications. We have with the last 2-3 acquisitions, now we have around 7-8 products in our suite. And each of these teams are, spread across the world, and they have their own own stuff going on. So we needed 3 to 5 year runway for them. Plus, we have $100 million fund and all that. So that was the core goal of going for this funding.
Sandeep, we had Ava Labs CEO Emin Gunsar earlier this week, and he is not a big fan of layer 2s, as you can imagine. He says that if you're relying on a layer 2, you've already given up on its layer 1. So, what do you say to that? How would you respond to that kind of criticism in general? Especially given the success that Polygon has had.
Yeah, so see, the markets speak for themselves. When I say markets, I mean the developer markets, right? So if you see the number of developers on Polygon, they are probably easily 10 to 20x, 20 order of magnitude bigger than the developer activity on Polygon is 20 orders of magnitude bigger than, let's say, any other layer 1, specifically, let's say, even from Avalanche and all that. And I know Professor, he's he's a big proponent of scaling at layer 1, but we find it very difficult that on the layer 1 generally you are constrained with 3 things, you have decentralization, security, and scalability. And the scalability trilemma, famously as said by Vitalik, you can only choose 2 out of them. So it's very hard for us to and many researchers, it's not us, many of the researchers, and the topmost of them are in Ethereum space. And it's evidently clear to us that the scaling is not going to happen on one particular layer. For example, if you see how the internet also globally is built, that you have these big optical fiber lines between transcontinental optical fiber lines between these continents, but then each country has their own subnets and all that. You can think of those subnets and cities having their subnets and all that as kind of a layer 2, right? And then you have one layer which connects the whole globe. We believe that at Web3, we all are basically creating this internet of value. And then in that internet of value, Ethereum is the settlement layer, right? And then on the settlement layer, you need extreme decentralization. Of course, it's going to have it's going to mean that there will be the cost will be high and all that, but it's extremely decentralized, extremely secure, resilient, battle tested, and has strong network effects. And then the business activity where the apps can have millions of users, they cannot exist on the layer 0. They will have to have, basically on layer 1, they will have to have these own subnets or these own layer 2s where these users can interact. I think Avalanche is also trying to work on this subnets put within the layer 1, but I think the concept has been around from them and like there is one chain that they have live, and already with very minuscule adoption, their costs, the transaction costs on Avalanche have soared quite a bit. I think the dollars range, or the transaction fees range between like $2 to $10 also. So already like they are already running into the problems which Ethereum used to run, right? So it's very hard. Like you also know some of the other layer ones which said that they will have tens of thousands of transactions per second on the layer 1, and then we all know where it went.
To the point that you said that the market speaks and that you look at development behavior, but there's also a lot of big money going in to some of the competitors to Ethereum, and we saw recently with the wormhole bridge, there was the attack that basically led to this massive bailout for a third of $1 billion of people who were dealing with wrapped ETH. Does that tell us that there's big money going into competitors to Ethereum that are going to invest heavily on these layer 1 alternatives, and that they're going to make sure that they survive? I'm talking about the likes of Solana, which has a lot of investors in it. Do you think that that's sort of centralizing these other layer 1s, but nonetheless will make sure that they'll survive with as much money as they can plow into it?
Yeah. So see, funny thing about this crypto space is that the space does not care about where the VCs are putting money into. Like even today VCs are putting money into Polygon also, right? It's like probably the biggest funding round. That means that they are also bullish on Ethereum. The fact is that none of the VCs right now who have put in large money in these various different protocols, if you see, the same VCs are involved in one particular layer 1 protocol, they are involved in other two also, and then many of them are also involved in layer 2s like Polygon and Starkware and whatnot. The fact of the matter is, and that's the core thesis of Polygon, that we are still fairly early into this infrastructure development of Web3, right? And then there are going to be multiple iterations before the market settles on something like okay, this is the ultimate infrastructure of Web3, and only thing that seems to be very sticky and lindy, as they say, is Ethereum right now. And we are very strong believers in Ethereum, and we believe that it will continue to grow as it adds some of the scalability with this POS merge that is happening, and then later on, like if the data availability shards come in 2 to 3 years, 5 years time, so it will enhance the scalability for layer 2s, and it will provide massively scalable Ethereum ecosystem where the 100 million to 1 billion users can come in. Right. And so coming back to your VC's question, I don't think any VC has any conviction right now. They are just, putting their eggs in various baskets, and,
Oh no. Is he frozen? Hopefully we can get him back, Sandeep. Oh, I had so many. Oh, go wait. I think he's coming back. Okay. Sandeep, I just wanted to switch topics. Yeah. No worries. So Vitalik Buterin donated about $1 billion in SHIB to the India COVID Relief Fund, which you founded, and you're giving back $100 million to him. So I just wanted to, find out why. And I know it has something to do with him being a foreigner and being able to deploy money faster potentially, but I don't understand why that is. And I'm curious how you've been managing the rest of the funds.
Yes. So see, the problem is that Indian, regulation is still not very clear around crypto, although we managed, or we run the crypto relief fund in a way that crypto gets converted into the fiat currency outside of India, and only the fiat currency hits India. But even then, there are multiple, scrutinies keep coming in, and then, we have to be extremely compliant, and, anything we have to do, we can't experiment too much. Like we have to be absolutely sure that this project is good, and then we can, deploy money onto that. So all this while, like, even though Vitalik donated 1 billion, worth of Shiba, but, like, I mean, there's not so much liquidity. So we could get like around 470 million out of it or something. And then we have been in the last 6 to 8 months have been able to deploy around, 75 million dollars. And Vitalik had some ideas about some of the experimental projects where he wanted to fund not only in India, but outside also. And it was donated from him only. When we had that discussion, we said that, absolutely, like, for him, since he's an outside or a foreigner from India, and he's not that much bound by, a lot of scrutiny that happens in India. So he can, route these or fund these companies from outside India by having a, separate entity somewhere else, and then can donate from there. So he's basically more free to do experiments. Like, let's say we experiment a project with some of the NGO or some, let's say, testing developer and all that, and turns out they are not so great, or they are like, there is some sort of scam involved in something, all the responsibility comes into me. Because, if you see, when I started that fund, I said, I take the full responsibility of transparency and that these funds go to the right places. And, globally,
and going
also,
to COVID relief, right?
Yes, COVID relief. We call it crypto relief. And I'm saying that, globally also we know, but in India specifically, there has been a lot of bad practices within NGOs. Some people run it as businesses and all that. It's very hard to separate who's actually going to take that impact into the market, onto the ground and all that. So we make sure that we have multiple audits, multiple, scrutiny before we sign off any amounts to them. Because I, being an Indian, if anything goes into wrong hands, I or my family can directly get into trouble. So I have to be extremely careful. But for Vitalik, he can be much more flexible in terms of experimenting it. And Vitalik's thesis is very clear that, even if you put, let's say, 100 million out, and then let's say 20-30 million goes into waste, or those projects are not good enough, at least 70 million gets to the ground, right? So it's
and also Sandeep, fine. We got to wrap up, but I just want to, get in one more question there, and that's on the state of India, because the central bank chief has been saying that crypto is unstable, less valuable than tulips. The finance minister is saying just because they're going to tax crypto doesn't mean that it's legal. So I wonder, what is the state of crypto in India, in your opinion?
See, there are various narratives, but I'll tell you what I hear from the top leadership. The top leadership is very progressive in India. Then they know that this is something big that is happening, not like just now you had like KPMG getting involved into it, and Tesla and, Elon Musk of the world are involved into it. So they know, although they don't understand it fully, but they know that there is a very high potential here, and this might be the next internet. So they also don't want to go absolutely hawkish on it and, completely put umbrella ban into it. And also, but India is such a large country and has a history of black money and all those things where the money, where those transactions don't come into the books. The moment, and the government has done a lot of work in the last 10-15 years to bring a lot of information technology into it and bring a lot of things into the books. But now suddenly you introduce crypto, and then people have a completely new avenue to take this stuff out of the book. So their nervousness is fair, very, very fair, and they want to go slowly, but they also clearly don't want to ban it. So I don't see any chance of crypto getting outright banned in India. They will slowly progress. Right now they want to push back the retail to coming in hordes to crypto. They want to take it slow, allow only big institutions to come into it, and then slowly understand and then grow with the policy.
I feel like we could have a much longer conversation on this, but we got to wrap it there. Thank you so much, Sandeep, for joining us. That was Polygon co-founder Sandeep Nailwal. All right, coming up, Crypto Bowl this Sunday, and checking in with CoinDesk Global Policy and Regulation Managing Editor, Nick Day.
I was posting art on Twitter. I had a physical painting I did, and I made a little website. A few months pass, and I get an email. I love your art. I'm interested in digital assets. Do you know what NFTs are? And I read that, and I was like, what?
And trying to explain to people that we can have these collectible digital assets that you can own. And then the digital assets, like game assets, is also a growing sector.
Remember the ape thing? I was like, oh my God, I need to get in.
right, welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who's also the editor of CoinDesk, the State of Crypto newsletter. Happy Friday there, Nick. What are you watching?
Good morning. Been a weird week, pretty insane week, I'd say. We're going to see a lot of this, I think, continue next week. We have a couple different things I'm keeping an eye out on. One of them will be the Senate Banking Committee hearing on the stablecoin report. It's going to be following the House Financial Services Committee that we talked about on Tuesday. And we'll also, I imagine, probably see a bit more on the Bitfinex hack money laundering suspects, who yesterday were accused of making plans to flee the country, potentially, in a new document released by Washington, D.C.'s District Court. So I imagine we're going to hear more about both of these issues next week, and it's going to be pretty, ongoing, certainly something to keep up with.
Yeah, Nick, speaking of the Bitfinex hack, there's a question that's kind of been floating around as to who actually is going to get the coins now that the government has gotten them back. That's not as clear as people might think it is, correct?
Right. So in its initial statement on Tuesday, Bitfinex has said that it's looking forward to recovering the funds. And the implication, and I think the assumption, is that because the coins were taken from Bitfinex would be the recipient of all proceeds. However, it looks like a lot of the customers who were on Bitfinex at the time who were impacted are hoping to recoup some of the funds directly, because even though at the time Bitfinex released a couple tokens to basically try and repay its customer base, the returns on those tokens weren't quite the same as what Bitcoin saw in that same time period. And I'm honestly not too sure what the legal precedence here is. So I don't know who has a stronger case at this point, but most likely what we're going to see is there's going to be kind of a drawn out battle between Bitfinex, its former customers, or whoever was on the platform at the time, and possibly even the U.S. government, depending on how federal prosecutors see these funds. One thing it is worth noting is I've seen a couple tweets out there that says that these funds are now on the U.S. balance sheet. I don't know if that's a correct assessment of what's happening. It's more that the U.S. government has a hold of these, but it's not going to be putting them on its balance sheet. Usually what happens is these will go to the U.S. Marshal Service, who in past cases have auctioned off Bitcoin recovered through these kinds of legal procedures to the highest bidder.
Yeah. It's equivalent of saying that guns and cocaine are on the balance sheet of the U.S. government as well.
Exactly,
I don't know where people get this from.
All right. We'll certainly be monitoring these developments. Thank you so much, Nick, for joining us. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
The Super Bowl is now being dubbed, at least by some people, the Crypto Bowl, for all the cash that crypto companies are dumping into ads during the big game. Think I'm kidding? Well, take a look at this teaser for an upcoming ad by none other than Exchange FTX. Have a look.
I've missed out on talking for 33 years, but I'm not missing out this Sunday. FTX is giving away the time their ad runs in Bitcoin, and I'm going to win.
My goodness, that's just one. There's a whole bunch more. But don't trust
and
celebrities.
That's just the tease. That's the tease to the actual commercial that will be played on Sunday.
But
oh, goodness gracious.
Don't trust celebrity endorsements for crypto. And that is what our next guest is saying. He's none other than CoinDesk Chief Insights columnist, David Morris. David, welcome.
Thanks for having me.
So celebrities, don't trust them is what you're saying. What are you so worried about? Everyone loves celebrities. They tell us what our politics are.
Yeah, celebrities are part of the equation. I think that there's a bigger issue or a bigger point here just having to do with the level of exposure that crypto is getting right now. I've been in this space for almost a decade now, which is insane to me. But I obviously believe that there is some fundamental value here. There is some innovation going on that's worth people paying attention to. But I think that it's important to recognize that, especially right now, the proportion of people who are actually using these tools versus those who are speculating on them is really low. So most of the activity is arguably still speculative, and people need to understand that. So when they see a Super Bowl commercial or a celebrity endorsement or something like that, understand that this is all still largely an idea. And if you don't understand the ideas, then you maybe should be very cautious about investing. And I have a lot of other things to say, but these celebrities, also keep in mind, are by and large getting paid to say these things. And if they're not saying it explicitly, they might be getting paid in a non-public way. So all of this stuff, be very cautious. It's a old trope, but don't invest more than you can afford to lose. There's all kinds of other basic lessons. But I think the one thing I would say most strongly is if you are curious about these things, try and use them and try and learn about them. Know what you're getting into before you put your money on the line. And at least try and understand the basics of the technology and what the value proposition is, because there's some very complex thinking going on, and a lot of it is still speculative. And we can say more, but I'll throw it back to y'all.
Well, we were flashing the article you wrote for us on CoinDesk, sure. And, don't trust celebrity crypto endorsements, and don't trust yourself either. You were referring to Binance releasing a celebrity ad that basically said, do your own research. Don't trust celebrities, while they themselves showed a celebrity endorsing Binance and, telling them a message in the crypto space. But in your article, you mentioned, the problem, unfortunately, is that you doing the research is a gigantic idiot. And I think what you were trying to say was there's a bit of an unfair playing field for folks because, in traditional finance, at least, they have public disclosures that they have to make. And that doesn't happen in the crypto space.
Yeah, there's a ton to talk about here. I was driving the point home rhetorically a bit. Hopefully, especially our readers are not idiots. However, if you, for example, follow the injunction to do your own research by going on to Google and starting to search, there's very little guarantee that you're going to find good information by which to do your own research. Because again, yes, disclosures are not required in the same way in this space. The SEC is still catching up in terms of regulation. Also keep in mind, not just celebrities, but the exchanges themselves don't necessarily have the same incentives as you. They get money when you buy an asset, regardless of what that asset does afterwards. So if you, for example, buy $1 million worth of Doge, they take a transaction fee on that Doge. If it goes down 50% the next day, the exchange is still totally fine. And so, for example, if you're reading about assets, don't necessarily go to an exchange page that purports to teach you about them. Try and do independent research. Obviously, I'm going to endorse CoinDesk as a good place to start doing that research. We try and maintain our objectivity and do real analysis. There are other good sites like Decrypt and The Block are also trustworthy sources for information. But if you're just out there Googling, you're going to get ads for things that are scams. They're going to target you because they see that you're looking and maybe don't know what you're looking for. By the same token, YouTube influencers, be careful. Everybody is trying to take your money in this space, and a lot of them are trying to do it dishonestly, and be careful.
And they're appealing to your own biases as well. I mean, and that's how you link, to the problems with QAnon and in Wonderland DAO. Even when they found out that the co-founder of Wonderland DAO was a serial con man, folks were still very emotionally invested in their tokens.
Yes. Yeah. And I want to call back to something that Sandeep said in an earlier section, Polygon founder. He was talking a little bit about Lindy effects, and I won't go into the catchphrase, but what he said was very true, which is that things that have shown some endurance in the space are more likely to be good going forward. And in this space, the two obvious ones there are Bitcoin and Ethereum. They have shown that they are durable and have some value proposition and applications. The other thing that he said that I think is very important is, and I'm quoting, VCs don't have any conviction. That is, venture capitalists, people who are professional investors, are spreading their bets out. So if you, as an individual investor, are trying to make some bets, don't commit to one thing and don't get emotionally attached, because there's a huge diversity out there of value propositions, of technologies, and most importantly, of individuals running these things. The people running them matter. So do your own research is true. Do it cautiously. Spread your bets out. If you're new, stick to things that are proven, and understand that the level of speculation is very high.
Yeah, I mean, look, do your own research is the mantra of people who follow Jenny McCarthy. But we also have, like, as you were saying before, these influencers, and it kind of blurs the line between, experts and celebrity. And most people who are watching the Super Bowl are looking at it and they're seeing the celebrity endorsements, and they know the celebrity's being paid a lot of money. They know the celebrity doesn't know crypto. Nobody's going to Matt Damon and say, Matt, you seem like a very smart guy. Can you tell me more about what your thoughts are on Polygon or Solana? No, nobody's actually doing that. But is it the influencers actually a bigger problem, particularly in crypto, than either most people like to admit, or is it something that maybe needs to be regulated more?
Well, I first of all, I would say, I hate to be a cynic, but I wouldn't necessarily give people that much credit when it comes to Matt Damon's crypto expertise. I think a lot of people make very rash decisions based on limited information, and the celebrity face often scans to them as an actual informed endorsement. So, I hope everybody is thinking like you, but I'm not totally sure. On the influencer front, yes, it's a huge problem. YouTubers in particular, and I'm not going to name any names, but there is a rash of people who are taking cash payments to do what are effectively undisclosed promotions of individual tokens on their channels. And this really just goes back to, if it's new, it's high risk and it's more likely to be bad in crypto. Anything new, you have that much bigger chance of it just being an exit scam, a rug pull, somebody's attempt to take all your money while building nothing. As far as regulation, I think that it's actually not a situation where we necessarily need, for example, the SEC to come in and issue new rules. What these people are doing is already illegal, and a lot of them are going to find that out the hard way. If you're taking payments for undisclosed promotion of a financial asset, that is already illegal. And people have, paid huge fines, and I think in some cases even gone to jail for example, writing blog posts on open access platforms like Seeking Alpha, where they, took undisclosed payments to write positive things about traditional financial assets. So this stuff is already something that the SEC pays attention to. They do prosecute, they do pursue people, and that is going to happen. And so, warning to all the influencers out there too, if you're taking payments for your promotion, you're on the hook. But as far as investors, yes, watch out. It's very hard to figure out who's trustworthy and who's not. And so be cautious, just be extremely skeptical, be a critic. Yeah. And that'll help you make good investments in the long term. Because I do, and I'll reiterate this at the end, I've been in this place for a while. I do believe there is a there, but it's important to recognize that we're at a moment where we're quite overextended, I think it's fair to say, in terms of the proportion of use versus speculation.
Mm-hmm. Well, lots of food for thought heading into the weekend. Thank you very much, David. That was CoinDesk Chief Insights columnist, David Morris. All right, let's check out crypto Twitter for our tweet of the day. Del Crixto tweeting out, I have a prediction for the big game. Crypto will take home the championship. Super Bowl 2022, the crypto ad takeover. All right. That's it for First Mover. Lawrence, have yourself a great weekend. Hope you get to catch a bit of that game. I'm your host, Christine Lee. In the meantime, check out the friendly folks at The Hash at noon Eastern and All About Bitcoin. Join me at 3 o'clock. You're watching CoinDesk TV. Next up, stay tuned for the daily forecast to see what's happening in the Asia crypto markets.
Join thousands of NFT traders who already start their day on CryptoSlam.
The verdict in a $1.9 billion Korean crypto fraud case is out. Welcome to the Daily Forecast, February 11th, 2022. I'm Megha Chadha of Forecast, covering all things blockchain. Now, 7 former executives of defunct Korean crypto exchange We Global, charged with defrauding over 50,000 investors, now know their fate. We'll take a look at the judge's decision and a whole lot more coming right up. Let's get you up to speed from Asia to the world. Let's kick off with some of the biggest stories from around Asia today. First up, India's central bank chief has issued a stark warning over crypto. Reserve Bank of India's Shaktikanta Das said cryptocurrencies have no underlying value and that it is, quote, not even a tulip. The governor was referring to the Dutch tulip mania in the 17th century, where a speculative bubble surrounded the highly sought-after plant. Das's comments come just over a week after the Indian government imposed a 30% tax on income from crypto assets. The RBI has consistently opposed crypto trading in the country, even issuing a circular back in 2018 trying to stop banks from facilitating transactions. However, the Supreme Court struck that down. And sign-ups to crypto exchanges like CoinDesk continue at a quick pace. Over in South Korea, gaming giant Netmobile has partnered with Binance on GameFi. The two are planning to establish a global blockchain gaming ecosystem. The world's largest crypto exchange by trading volumes is to provide its blockchain platform and tech infrastructure. While the developer of Everybody's Marble and Seven Nights will work on GameFi projects and NFT offerings. Netmobile has joined a growing list of South Korean game developers, including Kakao Games, Come To Us, and WeMade, who are diving deeper into blockchain gaming and the metaverse. You can find those stories and a whole lot more at focus.news. Staying in South Korea, judgment has been made in a $1.9 billion crypto fraud case. When the 7 former executives of now defunct V Global Crypto Exchange faced court back in January, prosecutors demanded life sentences. Focus Danny Park has the verdict.
All 7 were found guilty with sentences ranging in length from 4 to 14 years for 6 of the executives and 22 years in the case of the exchange's CEO. Prosecutors had urged a maximum punishment of life in prison due to the severity of the case, which they said destroyed the victims' families. Investors had been promised a 300% return on their virtual asset investments, as well as $1,000 in commission if they referred new customers to the exchange. But while some did receive a portion of the promised return, prosecutors said those funds had simply been taken from newer customers' deposits. Han Sang-jun of law firm Daegon, representing V Global's victims, told Forecast he expects all 7 to appeal. However, with most of the damages not recovered, he doesn't expect much change. During the trial, the exchange's former CEO Lee Byung-gul apologized to the victims and said there had been no intention to defraud. One expert told Forecast the verdict won't necessarily help the victims.
그리고 자기 형을 살고 나오면 형사적인 책임을 물었기 때문에 민사적인 부분에 대해서는 거의 그냥 피부에 와닿지가 않는 거예요. 이게 흘람하고 말람 말고 이런 식으로 계속 알고 있기 때문에 그 투자자들만 그 선의 피해를 당한다고 보시면 되죠.
Professor Hwang says despite the heavy jail time, Korean law may not be strong enough as he would have expected sentences of 80 to 100 years for a similar case in the US. He adds that the law should be able to punish more severely depending on the amount of damages faced by investors. For Forecast, I'm Danny Park.
Hackers made off with over $320 million last week in one of the biggest heists in crypto history. Wormhole, a cryptocurrency platform that allows transactions across various blockchains, lost millions in wrapped ETH in the exploit. While DeFi has been hailed for democratizing finance and allowing transactions at the speed of light, the wormhole exploit reiterates the need to balance speed with security as we move towards disintermediation. And Adrian Brink of Anoma, a protocol that enables trading of any kind of digital assets among any number of parties with full zero-knowledge privacy, joins me now to talk more about this. So great to have you with us, Adrian.
Good to be back.
Adrian, hackers exploited a bridge between Solana and ETH blockchains to steal millions. Some are laying the blame on Solana's speed and proof of history protocol. Your thoughts?
Well, I think to begin with, you can debate whether these were hackers or this was simply the way the system was intended to work. right? This is always the question. The implementation was live for everyone to see. Is this really hacking, or is this just using functionality that is unexpected? But it is there, and everyone was happy with it when they started using it. I think, though, sort of irrespective of that discussion, the speed actually has nothing to do with it. Solana's proof of history makes it hard to build, or it makes it impossible to build efficient Litecoins for Solana, which means that you need to be using semi-centralized bridges, which Wormhole is. Wormhole, it's not a decentralized bridge. It's a bridge that has 15 out of 20 signatories, I think. But these 15 signatories are just centralized entities. So I think it's nothing specifically to the speed of Solana, but the bridge design that is sort of based on the fact that Solana doesn't have an efficient Litecoin.
Wormhole is an interoperability platform, an area that you're very familiar with. What do you think was missed by the platform? What could they have done differently?
I don't think this was the intention of the original developers, that someone could, because effectively what was missing was a signature verification. As in the exploit or the attack really just replayed a transaction, at which point on the Solana chain, the smart contract didn't verify that the signature was correct. The main thing that people really have to realize is that what you see is what you get. As in, if you haven't looked at the underlying implementations yourself, or someone that you fundamentally trust has looked at them, you're always at risk. And I mean, clearly in this case, what was missing was security audits that could have caught this bug. But we also have to be realistic that in any large-scale system, there will always be vulnerabilities, unexpected behavior, and that is very, very hard to get around this problem.
Adrian, reports suggest that Wormhole offered the hackers $10 million to recover the money, but they were not likely successful, as we later heard that a venture cap fund backing the platform made good those losses. So this again brings to the fore perils of the lack of regulation in the decentralized world, doesn't it?
I don't actually think so. I think these kinds of problems also exist in the existing financial system. There are lots of exploits happening all the time. I think the bigger problem here potentially with Wormhole is that instead of having a truly decentralized bridge with a well-understood and publicly specified protocol like IBC, Wormhole, it's effectively a multi-sig, right? And so there are perils in using completely new and untested protocols that are not well specified in the public eye, and hence may have vulnerabilities that are unexpected. I think this will go away over time, though, as we put more and more trust into these systems and start using them more and more.
Well, that is the key, isn't it? More testing and audits needed to improve the systems. Thanks as always for joining in, Adrian. And that's the Daily Forecast from our team right here in Asia. For more, visit forecast.news. I'm Megha Chadha. Until next time.